What's up, everyone? My name is Cowboy Cayman. Thanks so much for coming back to the channel. Today I just wanted to give you a little market update as we've had some tanking stocks and the Dow is starting to go back down. And I just want to address the point of, is a market crash inevitable? There's a few indicators that we've hit in terms of resistance points in the market that I would like to illustrate to you guys in a little bit more easily digestible version than maybe is presented online. That being said, before we get into it, please don't forget to hit that subscribe button so you can stay up to date on all things Cowboy Cayman, because you really would hate to miss another update like this. That being said, guys, let's dive right into it. So you guys might have heard of a famous investor called Warren Buffett. He's one of the richest people in the world and is one of the most famous investors of all time. He is an indicator that is well established as one of the most reliable ways to predict when a market drop is inevitably on its way. The Buffett indicator, as it's been coined, is a well-established way to predict when markets are inevitably going to crash and if something potentially negative is on the horizon. It takes the market capitalization of all publicly traded firms and divides by the quarterly GDP. This recently hit an all-time high percentage of 179%, well above the average of about 107. While this pandemic is a once-in-a-lifetime event, it does make indicators like this tricky, as it takes it to new grounds that it hasn't quite reached before. This indicator is known to surge directly before market crashes. It did so just before the dot-com bubble in 2000 when it hit 118%, the record high for that time, and then before the 2008 crisis it had surged again to over 100%. Now, in the recent years, it's averaged out at about 100%, but with 179% being the recent high that it hit, this is getting into some dangerous territory. If obviously the most well-known investor in the world is saying, hey, this is a tried and true method of predicting downfalls, maybe we should put a little bit of credence into what he has to say. And secondly, we have another indicator of overall market health, and that is the ESPY Oscillator. I'm gonna go on a limb and assume that absolutely nobody knows what that is. I'll be honest, up until a few months ago, I had no idea what this was, but it basically is a way to judge market sentiment.
Facts don't care about your feelings.
I agree, Ben. Facts don't care about your feelings. But unfortunately here, the market has an unfortunate history of being driven purely by sentiment. We've even seen in recent days when just a simple rumor of a cure drives the market up nearly 5%, and just one tweet by Elon Musk saying that Tesla is a little overpriced, this drives the stock down nearly 10%. The ESPY Oscillator is not quite as easy to define as the Warren Buffett indicator is, but generally speaking, anything above 5% means that the market is overpriced. Right now we're sitting at 7.2, a nearly 50% increase from the threshold of survivability. Now, what do these two indicators mean for you? Most likely, I say that with the most heavy asterisks in the world because obviously nobody can time the market. But there is a lot of resistance points that are pointing to a potential downturn in the market. I'm not going to say that we're going to retest the lows that we did in March. It's likely that we still have a little bit of a downside before we can start regaining a foothold from what the coronavirus has taken from us. Now, what does this mean for you as an investor or somebody potentially looking to get started in the market? I do need to put up a warning, as this is purely speculative, and this is just what my thought on the market in its current situation is. I am not an expert, as much as I wish I was. Uh-oh. Okay. Well, obviously I am proud of some of the stock picks that I've had in the last few weeks / months, and I hope that some of you were able to benefit from the stocks that I'd given to you and said, hey, maybe take a look at these. I can say honestly that I have been doing well in terms of my overall portfolio output these last few weeks, but that's because I take a lot of time and energy to actually analyze the stocks that I am invested in, and I can really be comfortable with putting more money into them as I know that they're a great company, and maybe in the short term they'll go down. In the long term, I have high hopes for some of them. The problem is this is a very untested time and we're in unprecedented territory. The recommendation I would make to some of you is just to maybe wait it out for another few weeks, let the potential market volatility go down, because it does seem like in every single instance of high growth or high loss in a short period of time, whatever it be, there is always a trap. Whether it's bull territory and we've gone to unprecedented highs, there will most likely be a bear trap. No, not that one. What I mean is a trap to fool the bear investors. The people that are saying, oh, we've reached too high of a limit. The stock market only can go down. Yes, we might get a little bit of a downturn, but most of the time it's followed by a high rally. The opposite can truly be said too. For a bear market, when it's gone down for a long period of time, there will always be the little curve that tricks people into saying, oh, we've reached the bottom, now's the time to get back in. Because that's when the true losses happen. It happened in the dot-com bubble, it happened in the 2008 financial crisis, and I'm guessing most likely it will probably happen here. Obviously, if the market just were to continue going up from this point forward, I would be overjoyed, as that means that we have gotten rid of this garbage in the world and we are able to finally start regrowing. The problem is that's not exactly realistic. While these indicators might be saying that there's a little bit of a rough patch ahead, the unfortunate thing is it doesn't really give us a time frame to work with. If we think about it objectively, not everyone will be able to return to work when this coronavirus pandemic is over. Some jobs, unfortunately, have probably been permanently lost. I have several friends in the restaurant industry that unfortunately might not have a job to go back to at the end of all this. And I know that there are millions of other Americans that are in a very similar boat. So how can you truly make the most of this time that we've been given and this very interesting scenario that we've been presented with? Because if you're not making the most of this scenario, you are letting the coronavirus win. I say that obviously with a grain of salt because some people are in very unfortunate scenarios and the economy has put some people in a heavy bind, and truly, I wish you the best. This is truly a very turbulent time and we are in unprecedented territory. Walking out into this corona decimated economy can be tough, but if you can put some time and energy into your financials and understanding what your investments are and truly who they are as a company, that can only benefit you and hopefully help you realize like, oh, this is a great investment, this has strong potential for growth later on, or these guys might not survive this pandemic, they might not have enough cash on hand to outlast this. Fortunately though, guys, it's not all negative news today. Several banks that I'll link in the description below have actually increased the amount that they're giving for sign-up bonuses with new accounts. So I would highly encourage you looking into that, because if you keep your money there for 90 days and have a certain amount in direct deposits added in that time frame, you can make free money. I personally have actually signed up for 2 new accounts and have direct deposits going there so I can make the most of this time and get the most out of the money that is being given to me. And as we wrap up here today, guys, I'm Cowboy Cayman. Thanks so much for stopping by. I have several more videos planned for the upcoming weeks and can't wait to get them out to you. We are all in this together, guys. Don't forget it. And if any other big things come out in the market in the next few days, you'll hear it here first. Thanks for watching, guys. Here's to the next one.